Welcome to the Business Outlook Survey press conference call. My name is Doug Bennett, Media Relations Intern with the Federal Reserve Bank of Philadelphia, and with me today is Mike Trebing, Senior Economic Analyst here at the bank. Today we will take questions from reporters about what our manufacturers had to say about business activity in September. Our process for this press conference is to address one question at a time from each reporter. Follow-up questions may be asked after each reporter has asked a question. Now, Mike will give a brief summary on today's report. Mike?
Well, thanks, Doug. Our survey of regional manufacturers this month suggests that conditions were basically flat this month. In particular, indicators for general activity and new orders improved from the previous months and were near zero, indicating no change from the previous month. The same firms, however, reported declines in shipments and inventories, and the employment indicator remained negative and near its reading the last few months. Our price indexes suggest generally a slight increase in prices for inputs, but manufactured goods prices remain generally steady. Our future indicators reflecting the firm's outlook over the next 6 months improved dramatically this month, yet supplemental questions this month indicated that firms were still expecting a deceleration in production growth over the remainder of the year.
Thank you, Mike. We will now take questions from reporters. Katie Eder?
Hi, Mike. How are you?
Hi, Katie.
Good. I know last month when we spoke, you had mentioned that in September is normally a pickup from the slower summer months. What do you think has led to not so much of a pickup for this September?
Well, we did see in the non-seasonally adjusted numbers some improvement with regard to those that are slower in the summer months, but in general the indicators are about even with regard to activity and new orders, telling us about as many firms are experiencing growth as are experiencing declines. And those two indexes are improvements over the last few months. So instead of seeing declines, we're seeing more or less flat activity in September. And as I mentioned in the overview, some of the other current indicators are still in decline, shipments in particular, and employment indicators are still weak. But on balance, the two broadest indicators, new orders and activity, have shown some gradual improvement, and this month they're close to zero, which is a better reading than we've seen for a while.
Thank you, Mike.
Thank you.
Mm-hmm.
Ellen Freilich, Reuters?
Yes, Mike, you said the broadest components, new orders and activities, have shown some improvement or stabilization?
I think the levels, suggest some stabilization. We've had negative readings for both of those indexes, but improvements in the last 3 months now, them both moving up, closer to zero, and that new orders index actually broke the zero barrier this month. So, and that's consistent with the comments that we heard from respondents this month too. We get comments on both sides of the fence. Those that are still experiencing declines and those that are showing growth. And the most common theme this month was level activity or kind of a zigzag movement the last few months, but not nearly as negative this month as we had seen in previous months.
Thank you, Mike. Follow-up questions? Katie Eder?
Yes, I have one. I'm just thinking there's been kind of a trend in the industry of doing the same amount of work with less people, which is showing up in these results with a lot more firms decreasing their workforce than increasing it. Do you think that there will be a pickup in hiring going forward if they're projecting increase in activity in the 6-month indicator?
Yeah, and in fact, we did see that a little bit this month. We saw some improvement in the 6-month indicator for employment. Not nearly as big as the jump in activity, order, and shipment indexes, but for example, about a third of the firms now expect to increase employment over the next 6 months. So they are hopeful, at least going into the first 2 or 3 months of 2012 that some of the declines or the slow growth that they're expecting over the rest of this year will start to recede into growth.
Okay, thank you.
Mm-hmm.
Follow-up questions, Ellen Freilich? All right. Katie, do you have any more questions?
Wait, sorry.
Oh.
Sorry, I was confused. Any anecdotal evidence that QE, this survey is probably completed before the Fed made its QE3 announcement, is that right?
No, not actually. We the deadline for receipt of all the information is usually the Tuesday prior to release.
Mm-hmm.
So it did cover that period. We got about a third of the forms in electronically after that decision, but there was not really too much difference in the overall numbers. A couple indicators were slightly different, but by the time we get 2/3 of the sample in, we can pretty much see the pattern of the numbers. So with regard to that, I think the evidence suggests that that's still to be seen in the future, but not from this survey.
Wait, the evidence suggests that it might be seen in the future?
Well, we're picking up expectations, every month, and but that event came, toward the end of the survey. So my appraisal is that it didn't have much effect on the overall numbers, and we're asking, of course, half of the survey is about change from the previous month, so it would only show up in expectations.
Right. So maybe that would be interesting to see whether there's any improvement next month, based on it could be attributed or not, or consciously or unconsciously to the Fed's move last week.
Right, and the comments we get are typically about underlying trends or changes from the prior month. We get fewer comments about their specific 6-month forecast, unless we ask specifically for that. And we did ask a little bit of forward-looking questions in the supplemental questions this month, in as much as we asked them about their expected growth for the third quarter, which ends this month, and then we asked them whether they expected some acceleration or deceleration in that growth rate for the fourth quarter. So that gives us a little bit of a read on the next few months, but not nearly as long as the 6-month forecast.
What did they say about whether they expected deceleration or acceleration in the fourth quarter?
We had on average firms expecting about a little less than a 1% decline in the third quarter, and with regard to acceleration and deceleration in the fourth quarter, we had more firms expecting deceleration, about 45%, compared to 32% expecting acceleration. So on balance, that suggests that they're not terribly optimistic about strong growth for the rest of the year. But as I mentioned, that's a little bit different than the 6-month outlook that we ask in the normal questions.
Okay, thanks a lot.
Sure.
Any follow-up questions?
I just have a quick follow-up. To have a special question when you compare the third quarter to the second quarter. Did you do that previously, where you asked them to compare the second quarter to the first quarter?
We did. We asked the same question last year. I don't have those numbers in front of me, but I can get those to you.
Okay. Yeah. I'm sure I can find it on the website. Just making sure. Thank you.
Right. We tend to ask these questions. We repeat them in the same fashion so that we have comparisons. This one may not be as useful comparing a different time and circumstance from last year, but still it's helpful to have consistency in the questions.
Right. Okay. Thank you.
Any other follow-up questions? All right. Thank you for joining us. You've just been watching September's Business Outlook Survey press conference call with me, Doug Bennett, Media Relations Intern here at the Federal Reserve Bank of Philadelphia, and Mike Trebbing, Senior Economic Analyst here at the bank. Next month's
Thank you very
business...
much. Thank you. Bye.
Thank you.
Thank you. Next month's Business Outlook survey will be posted on our website on Thursday, October 18th at 10 a.m.